All right, hey everyone. Mark here. Mark P Markets. Thanks for joining me for another Greenbridge market analysis. I'm not on TradingView today because I could not get that stream working properly and it takes me too long and then I won't be able to get this one going. So anyway, I'm still working on fixing that. So for those of you that join me here on YouTube, I appreciate that. Thank you. But I am working on, getting that TradingView thing sorted out. So hey everyone, thanks for joining me. Peter and David and Mr. Plow and cool. All right, so let's get this thing started. For those of you that are new to the stream, please share the symbol or the market that you would like to see now in the chat. So once I get through my analysis, I can go through your symbol. If it's an altcoin, please put USD or USDT after the symbol so that I analyze the right symbol. All right, so the objective here is to basically look through the different markets and the charts that you would like to see to basically get two things. We want to get a sense of market structure so that we can anticipate what is likely to happen next over the following days, and we want to get a sense of reward risk, okay? Mostly risk, because that's what this game is all about. Those of you that read my article that I published yesterday, I wrote a little paragraph about that whole risk thing because that's basically what everyone should be focusing on, because that's going to be the thing that helps you make the decision to take a trade or not. All right, so with all that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. And hold on a second here. Okay, you're going to see my chart here in a moment. There's my Bitcoin chart. Now, one thing also, today is Monday, so we have to go over the economic calendar very quickly. I don't want to spend a lot of time on it because I didn't see anything that important. So first things first. Again, I don't use the TradingView one. There's other ones you could look at. The main thing is you're looking for any standout economic events like FOMC meetings, NFP, all that kind of stuff. All right, so the first thing that I see here on the calendar is today. Well, okay, all these things were today earlier, so I'm not going to talk about those. We have at 7:50 p.m. tonight, we have the Bank of Japan monetary policy meeting minutes. That's not a big deal. At 8:30, we have Australian retail sales. Again, these are not big market movers, okay? So in 2 days, so what is this? On Wednesday, we have China non-manufacturing PMI and NBS non-manufacturing PMI. Usually these type of numbers out of China aren't big market movers, but with China being in the spotlight again with that whole thing going on with with that company or whatever, maybe they'll make a bigger deal. I don't know, but I wouldn't really bet on that. Okay, so also now on the 30th, for the pound, we have gross domestic product, quarter over quarter, not a big market mover. We have consumer price index for Europe and consumer price index core. Those numbers usually come out around 4 or 4:30 a.m. or something like that Eastern time, just so you know. I don't have the timestamps on this calendar. Also, we have Germany harmonized index of consumer prices. Okay, nothing going on there. We have for the U.S. we have GDP annualized. Again, these numbers haven't been market movers. I wouldn't worry about any of these. All right. On the 30th, we have for Japan Tankan large manufacturing index, and then October 1st, retail sales for Germany and an ISM manufacturing PMI. There's no NFP. Doesn't say NFP on the calendar this week. Okay. Usually the first Friday of the month is non-farm payrolls. So I'm guessing that it's going to be next week. All right. Now that's important because we have generally what looks to be a very quiet week as far as scheduled economic news. Okay, so that's generally good because you don't have to worry about any random piece of information coming out and throwing the charts out of whack. Okay, so that's cool. So let's see. Let's now get into Bitcoin. I want to talk about the stock market really quick, and I want to talk about gold and the dollar. By the way, I don't know if Michael is here from the chat room. I don't see Michael. Michael, if you're listening. Michael actually shared a trade idea the other day, and I wanted to talk about it in the stream, and just kind of show people like an example, because he's been a follower of ours for a really long time, probably like almost 3 years. And he shared an interesting trade idea, but I don't see him here. Michael, if you're watching, if you can, share the trade idea, or if someone knows what I'm talking about, if you want to share the trade idea in the chat, because I would definitely like to review it. All right, so here's Bitcoin. Now, first things first, and I saw that question up at the top from David there. I'm sorry, was it? No, where was it? Peter, why altcoins usually follow Bitcoin? So I'm going to answer that question, while I'm going over Bitcoin here. So first off, let's talk about the price action and the structure. Now, I wrote an article yesterday on TradingView, and what I said in the article was there would be a buy signal if 44K is taken out, but it's aggressive. Why is it aggressive? Because you're going against the structure, right? Now, a lot of people, there's a lot of confusion and a lot of vagueness when it comes to what a trend is and all that other stuff. But this right here, this whole structure, right? It's not a trend on the bigger picture. Yeah, sure, on your smaller picture, you can argue bearish trend, blah, blah, blah. But on the bigger picture, this is a corrective structure, and it just happens to be bearish within a broader bullish structure, right? Which means you have to be very careful around support levels. And most importantly, you cannot have opinions in this game, especially at such a level. So you have all kinds of people with all kinds of opinions. Opinions tend to act more like absolute ideas, and they get connected to your ego. Like, well, I have an opinion, and I can't be wrong. It's my opinion, right? So once ego is tied in, now you're going to hold on to stuff, and that's really not a good habit, as opposed to calling it a scenario. Scenario, there's no ego involved. It's up to the market. It's not internal, it's external, right? A scenario. Well, the scenario could be this or it could be that. So I don't have opinions. I usually have no opinion because I accept that I have no idea where the market's going, and I let the market tell me what it wants to do. Now, people are so anxious to take trades that they'll jump into anything, right? So I talked about this right here, about being aggressive. And the idea is, look, if you want to take that type of trade, I talked about the higher low, which was a possible reversal off the 40K support area, right? Those are all bullish signs. But the thing is, the structure is still bearish. So that's conflicting. So we're getting a potential reversal, but in these type of situations, we don't have a nice, clean, bullish momentum structure here. Resistances are still being respected. All right, so that's a problem, and that's what one of the risks that I wrote about, and I said I'd rather just wait until the structure improves, because when you take a counter trend trade or this type of aggressive trade, you have to deal with this, right? And now you have the bearish pin bar, the fake out, and these happen all the time when you're in these type of consolidations or indecisive areas. So if 40K holds, then it will probably eventually break this 45K resistance, which is really what I want to see. And that would be the structure changing. I'm not looking to buy that breakout. I just want to see that the structure is changing. And then I can consider continuation patterns from there. I'm not going to get a good price, of course, but I'd rather buy into an improving structure, not this, right? Now at the same time, we have this lower high at 45K. It's respected. We have a bearish pin bar. If this candle closes like this today, we have a few hours, and it takes out the low of this candle, that's a sell signal. This is why I had no intention of sharing this trade with our members, because the thing is, when it does something like this, now I got to go out and send a message. Oh, now you have to get out, right? For the people that don't know that you have to get out of something like this, and they don't want to take the full stop. The full stop is about 4,000 points if you took that aggressive trade. But when you get a message like this from the market, this can give you an early exit, and you don't have to take the full risk. You can get out when the new sell signal is active, and that would be the low of the candle. It needs to be taken out after the candle is closed. So it requires babysitting, and it requires a lot of adjustment, right? Now, just because we're getting the sell signal doesn't mean we're going to break to a new low, but the structure favors that scenario. So if this all stays intact, right, the lower high, the bearish pin bar, and price starts pushing lower throughout the week, 37K is a possibility, because that's the next support level, right? The old resistance around 37K, what's this low over here? 39.5, right? So 37 is right around here somewhere, right? Yeah, this low over here. So it's possible to see that if this structure stays intact. Now, if the structure starts to change, meaning 40K is respected again, and we get a clean double bottom, like a clear, very clear double bottom, like in this area right here, maybe it's a bullish pin bar or something like that, that would be another aggressive trade, but at a much better price. So, you know, I'd be willing to take a chance on something like that if it gave such a clear signal. All right, but again, that's just one potential scenario that you could see throughout the week. Buyers may step in there because they're all going to be thinking, oh, double bottom, double bottom. And that 40K area has been a pretty consistent support, all right? Look, you see all these long tails on the bottom of these candles. So that's the Bitcoin situation. Now, to answer the second part, we had that question from Peter here. Oh, and by the way, for those of you, if you want to share what country or what city you're from, that's always a fun thing to do. I like to do it on TradingView because we got people from all over the world, and it's always very interesting to see. So if you'd like to share that, it's just a fun fact. Anyway, so to answer your question about why altcoins usually follow Bitcoin, I can't give you an exact reason why, because usually I don't question these things. If I recognize the relationship and it's there over and over and over and it's consistent, I don't ask why. I just respect the relationship. But my theory is basically it probably works very similar to like how stocks follow the S&P. There's usually reasons why if the S&P is going a certain way, certain stocks have to be bought. For that reason by hedge funds and stuff like that. That's why there's a tendency for stocks to generally follow the S&P. And that information is very useful to gauge when you're looking for relative strength or relative weakness. I'm sure if you Google it, there'll be some answers that may be similar to that or not. But the point is, as long as that relationship stays the same, right, I'm going to assume that altcoins will generally follow Bitcoin. And that's why I keep telling people, use Bitcoin as your guide. It's like the S&P relative to stocks. All right. Now, of course, there are exceptions where you will get altcoins that go and do their own thing. But that's often a function of some chat room or some fake guru pumping it. Right? They have some YouTube channel and they're pushing all this hype or whatever it is that they're pushing, and everyone piles in with like Solana and all these other ones, and that's just a temporary thing, right? So that's like playing the lottery. That's why you can't rely on that kind of stuff. All right. So good question. So that's Bitcoin. Let me know if you have any questions about it. Now, let me jump into the stock market real quick. Let's take a look at the stock market, right? The stock market's been very tricky because it rallied. Right, we had the FOMC, what was it, the week before or whatever, and the market has sort of rallied into that, right, or after that, after Powell said his nonsense because, the guy doesn't say anything of any type of decisive whatever. And now today, and again, I pay attention to no news. I don't care what's going on in the news. I don't care about any of that stuff. Just on a quick note, Bitcoin came off of that 45K, 44K area, and coincidentally, China comes out with their thing with their Bitcoin regulation, right? The night of that or whatever. I had no idea that the Chinese government was going to come out with that type of thing. I just knew not to buy into a resistance. That's how it helps, right? That's knowing your levels, knowing your structure. That's where it helps. I have no idea what's going on in the news, and I don't need it. It does nothing for me. It gives me no advantage, number one. If anything, it gets me into trouble because it plants the seeds of opinion in my mind, and it could even be subconscious. Well, oh, that news, right? Remember that news? I better be careful, blah, blah, blah. It's useless information, right? People just have this need to be informed because it gives them a feeling of certainty, but it's an illusion. It doesn't help you. All right, so speaking of the S&P, I don't know what news came out today or why we have this bearish outside bar, but we have a bearish outside bar. And that's important because that means this rally right here is nonsense. It's meaningless nonsense, and it's a lower high relative to this high here. So the structure is bearish. We also took out yesterday's low or Friday's low. Now, the market's trying to hold, but that's still a bearish outside bar. So that's a clue that momentum is likely to be bearish following this pattern. Okay, lower high, outside bar. Now we'll see how the market closes, but it's going to try to close. Maybe it closes like this or whatever. I would be anticipating that tomorrow's candle is likely to fill in this tail, right, and start going lower. So that's what I'll be looking for, and that's not good for stocks, right? So if you're in a stock swing trade or whatever, you may see some more weakness. Now here's the thing: this is not a bearish trend, it's a bearish structure. And we are going into this support area again, right? The general trend is bullish. There's nothing bearish about higher lows and higher highs all over the place. It's just the recent structure is counter, right? It's just a corrective type of move. So one possibility that we may see unfold as the week moves along, or maybe into next week, is a double bottom, right, in this area here. That would be a nice signal for swing trades, in particular stocks especially that are highly correlated to something like the NASDAQ, right? Semiconductor, oh look, AMD is doing its own thing today anyway, but this would be such a stock. AMD, that's a nice looking candle right there in the face of a not so strong NASDAQ. Other stocks that would do something similar, like NVDA, right? Look at the bullish pin bar trying to develop today, right? Inside of this consolidation area, that would be a higher low. Again, that's what I'd be looking for as far as swing trades if the stock market can hold that support. These things are likely to break higher, right? That's called relative strength. I mean, there's nothing bearish about this chart. Higher lows and higher highs everywhere. Also, keep in mind, the next few months, we're going into the holidays here in the US, and that's typically known as the Santa rally. So, perhaps we have some more weakness going into that, but this would be a good time to be looking for those support levels and looking for buy signals around support levels, because that may be the next leg, going up for the, into the next few months, okay? So notice I didn't say buy the bottom. It's just you're looking for a support area and you're looking for some sort of confirmation there. Stepping in front of it is a very risky thing to do and not a good habit. Okay, so that's the NASDAQ. Let's talk about gold and the dollar real quick, because that has a lot to do with everything. So look at the dollar. I mean, this is gold. I'm sorry. Look at gold. Gold is one of these markets that, very heavy on opinions. And it tried to give a buy signal. Look at the inside bar. I mean, this is a nice buy signal based on the rules that I follow. This is a nice double bottom area. Okay, it's a known support. It's an inside bar. It took out the high of the inside bar and all that. That's a lot of things lined up there, okay? But it's a little conflicted because, like Bitcoin, we are struggling with lower highs. So what's the story here? And we're getting this bearish pin bar now, right? So I didn't buy into this, but if I had bought into this and I see this, I'm like, all right, obviously my stop would have to be somewhere below these lows. Typically on gold, you're looking at around 30 points. 20 to 30 points would be your typical stop for a swing trade on gold. With a candle like this, if the low of this candle is taken out tomorrow, that's another sell signal going right into the support. So that support may break, right, at the way this is looking right now. So it's tough. And going back to my article on TradingView, it's like, okay, this may find a bottom again, and it may reverse off of here over the next week or so, right? It's possible, but you have to be willing to take that risk when it doesn't look obvious. Clearly right now, this doesn't look so great, but that doesn't mean it won't improve over the next few days. This thing may start working its way higher again and all that kind of stuff, right? In order to get those prices and to get like such a trade, you have to be willing to take that risk. And if you're not, then you shouldn't complain when you miss the move because you weren't willing to take the risk. Someone is willing to take the risk, and that's who gets the reward. At the same time, if the trade fakes out, you take a loss, right? That's what taking risk is all about. So let's talk about the dollar. So the dollar, this is, I think, a big factor here, and I talk about this all the time. You have the dollar. The dollar established a double top the week before. This actually occurred on, what, the day after the FOMC, whatever. And it tried to sell off, but you see this recovery situation right here? That is not bearish momentum. Okay, when you get an outside bar like this, bearish outside bar off of a double top, the next few candles should be bearish. This thing just completely reversed and now is trying to break out again, right? Strong dollar implies higher interest rates. So let's take a look at the bond market. Stronger dollar, look at the bond market, right? On its lows, made another low today on its lows. Let's take a look at the 1 week bond market. Look at this, okay? Pushing lower. That's not bullish. There's nothing bullish about that. Obviously, the bonds are pricing in rate hikes, I'm guessing, because this implies higher rates, right? Lower bond prices means higher rates, which means stronger dollar, which means weaker gold, okay? Now, there are other variables that affect gold besides the dollar, but it's a big one. So that's where you have to be careful in this situation, right? And you have to keep that in mind. If the dollar breaks out again, I wouldn't be surprised to see gold make that next push lower, you know, into those lower 1700s. These are attractive prices for gold, but that dollar bond situation needs to be decisive, meaning if the dollar breaks out, I would hold off on gold trades. I would just stand aside and wait until, you know, we get better information or something, because it's hard to believe that gold could go back to 1650, but anything is possible, okay, in the dollar strong environment, if that's what we're getting. Now, the Fed may be more decisive about it over the next few months, and if they are, you know, that's what's being priced in now. Keep in mind, smart money has better information than everyone else because they can pay for it, right? I wouldn't be surprised if some of the largest hedge funds and all that other stuff, they pay their politician friends for information that no one else has, right? What if you had advanced notice about what the Fed was going to do? So, yeah, sure, it's illegal, but stuff like this goes on all the time. Anyway, so let's talk about your questions. Again, thank you everyone for these questions. I want to jump into your questions now. So let's see, Mr. Plow. Okay, so hi everyone. Can you look at OMG? Sure. Thank you. Hey, from Switzerland. Okay, no problem. Let's take a look. OMG USD. So this recently, OMG has been showing us some bullish structure, right? I remember people have been asking about that. And here's the thing, it's getting hesitant. Look at these prices up in here, right? This area is a resistance. What is this? This is the $10 area, just over the $10, like $10, $10.50, like this area right here. You have a tweezer top over here. You have a lower high over here. So this is not a place, I certainly would not be buying OMG at such a price, right? Such an area. There's too much noise up in here and it's a potential resistance area. So I would be looking for supports if you're interested in this thing. And your first support, right, you have a minor one in this area, but what I don't like about it is there's too much congestion here. And if it breaks that support, you're probably looking at the one lower than that. So this support happens to be around $9, okay? And the next support, if that's cleared, is going to be here in this area, which is what? Basically 7.25, right? Those are your support levels. Now, OMG has been, you know, somewhat out of play for some time, and as far as following Bitcoin goes, it seemed to have been doing its own thing here for a little while, and now, I don't know, it's turning into a mess. So what do you do in this situation? Well, I think the best thing to do, for one, is if you're not in it, wait for a support, if anything, and, you know, see what kind of structure, what kind of candle you get from there. This one typically follows Bitcoin, but occasionally, again, if there's some hype, if there's some news, they start to do their own thing, okay? Which that's where you can rely on the chart more and on the Bitcoin relationship less. But you have to understand something. Those relationships are always changing, right? There's nothing that's set, you know, like one-to-one. Like, oh, Bitcoin does this, OMG is going to do that. It's always changing. So that's why I think it's best wait for a support and, you know, look for a potential buying opportunity there if you can get the reversal structure. If you're in it now and you're in it from a good price, hopefully you're taking something off the table, because with this type of price structure, it's probably a good idea. Now, just going back a bit, just to kind of give you some perspective, look where you are. Okay, that's a notable resistance that dates back to, what is that, April? And obviously others saw that and they sold. Okay, so that's what you're up against if you're in it and you're hoping. Hope is not a strategy, by the way. All right, so I hope that helps. Thank you for asking about OMG. And let me see what else. Hey, Adnan, good to see you. Another one from Switzerland. All right, cool. Oleg, Ukraine. Okay, hey, thanks for joining. Where are my Romanians? I'm big in Romania. All right, hey, Mai, good to see you. Hey, go forth. Bald, pale, and handsome. Hey, okay. Handsome. Yeah, you can't even see me today. All right, but I'm still bald and I'm still pale. Yeah, that's all true. All right, so thanks for joining us. Hey, why not? Why not? Greetings from Southwest Florida. Could you please look at GRT? All right, Southwest Florida. Yeah, Florida's nice. I like Florida, except half of New Jersey moved there, so I can't go there now. All right, let me see what we have here. This is GRT USD. Now, first thing I'm looking at, right, I'm looking at the broader structure. I want to see what's going on here in the bigger picture. I see a series of lower highs, right? I see these lower highs. We have some levels right there. This area right here is an established lower high, okay? And while it could be trying to make a higher low in this area right here and potential double bottom, it's trying. The broader structure is still, it's a larger magnitude, right? So at this moment, especially since you have some little mini lower highs, and I'm guessing this thing is following Bitcoin, I'd be anticipating that support to break, okay? Very similar to that Bitcoin situation. If Bitcoin breaks, this thing will probably break too. What is this support here? 67 cents, around there. So I would wait on this thing, right? Just like Bitcoin, if you're interested in a long, right now is it's an aggressive idea. Because yeah, sure, you may have the double bottom or higher low sort of, okay, off of a support. You have that going for you. It's just you're going against this broader structure, right? Which usually carries more weight. So there's two things you can do. You can take that long now and, you know, measure your risk from 62 cents. You should probably give it a little more room. I'd say maybe around 55 cents. It needs room, right? Don't put those stops too tight because they're very easily stopped out, especially in these less expensive coins. A lot of noise, right? So that's one idea, but you're accepting the risk of the lower high and the potential lower low. Now, that's the aggressive idea. The conservative idea is you let the double bottom or higher low develop and you let price start to break resistance levels, okay? Your first one is around, what, 74 cents? So sure, you have to give up a good price, but at least the structure would be changing. And at that point, I mean, if you want to go for the breakout, that's one idea. I'm not a big fan of that. I'd rather wait for the next higher low after that initial breakout leg, okay, which it requires a lot of patience. I know no one likes patience, I understand, but that's usually the better thing to do. You know, another thing you could think of, another thing I could think of that you may want to try is maybe you start a small position here, like a very small position, you know, just to get a little piece of it, and then once it starts improving, you add to it, okay? But again, I would be expecting Bitcoin to be doing a similar thing. If Bitcoin is not doing a similar thing, then you need to be very careful with this because it can fake out a lot. I mean, consider this. Look at this candle. Look at this candle tail over here, right? At one point, this candle was fully green and it sucked someone in, right? Someone thought this was breaking out. Someone in some chat room somewhere was hyping it and someone bought the top of that. And, you know, now they're sitting it hoping that it comes back. You don't want to be in hope mode. Anyway, I hope that helps. Thank you for asking about GRT. All right, let's see what else we got. So, hey, okay, cool. Would you trade something like this, please? How would you trade something? Okay, let me see. Okay, hold on. Okay. Okay, hey, Mike, good to see you. Okay, XEM. All right, so let me just jump around here. So what is that symbol? Let me see. What is that? Okay, hold on. All right. Okay, let me just go through in here and okay. Oh, so you can't, it's a bearish pin bar, first of all. Wouldn't go near that. Two, there's not enough information here, right? You have a higher high, broke out. The only thing you could do really sensibly is wait for a higher low. There's not much you can do with that, especially since it's relatively new. Buying, especially with that bearish pin bar, forget it. I wouldn't go near it right now, okay? I would say wait for a pullback. So thanks for asking about that. All right. Hey, Sean. Sean from Clinton, Washington. All right, cool. Hey, good to see you, Sean, one of our members. Alex from from Romania. Yes, Romania. I'm huge in Romania. Okay, hey, Gotham. Greetings from the Bay Area. TSLA. In light of where FANG stocks and indices are today. Okay, Tesla. So Tesla breaks out. That's interesting. What's the price of Tesla today? $7.96. All right. So obviously, Tesla has always had a reputation for doing its own thing. And like in more recent time, it hasn't. But now look at this breakout. So here's the thing. As far as the other FANG stocks go, I mean, let's take a look at Amazon. Amazon, is it up today? Is that 50? Oh, it's minus 15 points. Okay. What about something like Facebook? They're trying to get this little bounce going here. I'm not really impressed with this bounce at all. I mean, Apple trying to put in the higher low, right? Possible, but you have a head and shoulders here. A lot of conflict. So going back to Tesla, here's the thing. If you're in this, hopefully you're taking profit because it's vertical right now, and that's what you should do in these situations. You should not buy this. You should not chase this. If you weren't willing to take the risk at lower prices, this is definitely not the place to be taking risk. So what do you do here? Well, if you're interested in buying Tesla, you should be looking at lower levels, right? Your first area is going to be somewhere around there, which is what, 750 area, okay? And it's interesting that it's acting this way. Obviously, there must be some news behind that because the S&P and NASDAQ are weak today, and this thing is pushing highs. So relatively strong, okay. So you're looking for supports at some point. Perhaps it pulls back and tests the support. That's the best you can do here. If you notice, in recent months, I mean, look at these support tests, right? Just going back. Look at these breakouts and retest. Breakout, okay, retest. Notice that? Okay, I'm not saying that this pattern will continue, but breakout, okay, and eventually retest. All right, now obviously you had to wait like a week or two to get that retest, but you're better off waiting, as you can see, right? Typically. So perhaps you have to wait a week or two, perhaps it'll retest a better price. But that's what I would do here. I wouldn't buy this breakout, especially since the stock market has been acting kind of weak and has yet to prove that its structure is going to be back in bull mode. Not saying that the stock market is in a bear market, but you want to get out of that corrective phase before buying these things, because this can easily fake out, right? Or some other news could come out, and next thing you know, Tesla is back to whatever. So that's what I have to say about that. Can't touch this until you're back at a support. That's why, it's better off, you have your supports or resistance levels in advance. You wait until your price gets there. You don't sit there and stare at your chart at on a 5-minute chart all day. You wait until price gets back to your, to a price that you've anticipated some time before, and when it gets there, then you start watching, right? So you don't get caught up in all that fear of missing out and all that other nonsense. Oh, Gmail, hey, thank you, Gmail, sent me 200 coins. I'm not even on TradingView today. Thank you so much. I appreciate that. Yeah, I'll get back on TradingView. Like I said, I'm having a lot of technical problems with that, and I'm just trying to work that out. But once I do, I'll be back there on more of a regular basis. Okay, so anyway. So I hope that helps with Tesla. It's a nice looking chart, and clearly, it's a strong chart. So thanks for asking about that. Kim, hey, good to see you, Kim. Okay, Sean, rant. All right, I don't like it very much. This candle on Bitcoin is closing below the weekly MA21. All right, so yeah, here's the thing, right? So something like Bitcoin, you bring up a moving average on the weekly. Moving averages can act potentially as support or resistance areas, but the thing is they're very random, okay? Obviously on a weekly chart, it's going to carry more weight than something like on a 5-minute chart, So that's good. I mean, let's just look at the weekly here real quick. What does that look like? Well, I mean, it's way too early to judge this candle actually on the weekly because the week just started. So this bearish pin bar has a whole week to change. Who knows? It may turn into an inside bar, a bullish inside bar, right? There's no way to know. But I wouldn't make any judgments on that. It's too early. All right, so thanks for asking. At least, you know, on the weekly chart, I wouldn't make any judgments on that. All right, Elizabeth, hey, good to see you. From, Boise, okay. What about the possibility of U.S. government? Would you wait to take trades until after that is settled? All right, that's interesting because, again, like I said before, I don't pay any attention. I have no idea what's going on with that kind of stuff. If there's some kind of government problem, well, that's most likely, that'll probably act as a bearish catalyst for something like the S&P. Okay, I mean, look at the S&P today. Let's talk about this real quick, right? Same as the NASDAQ situation. NASDAQ was giving us an outside bar. The S&P is giving us a bearish pin bar. And what, this is going to close in about 15 minutes? Less than 20 minutes, this is going to close. If this candle low is taken out tomorrow, that's a sell signal. Now, no one was talking about that a week ago. No one was talking about that on FOMC day when this stupid thing went up, or the day after when it went up like 50 points, right? No one sees that coming. Anyway, so yeah, to answer your question, Elizabeth, I would just anticipate something like that would act as a bearish catalyst. But keep in mind, if they're talking about it now, and it's all over the news now, that it's a possibility, then it's being priced in. That's why you're seeing the red candle now, before they take that type of action, right? So that's what you have to keep in mind. So if they actually go ahead and close, then the market will probably do something you don't expect. Perhaps it rallies, and you're like, I don't understand. That was negative news, and the market's rallying. It's because it's priced in, right? So the market always prices in the future. So thanks for asking about that. That's an interesting thing. And that's, again, why I don't pay any attention to any type of things like that, because it creates an opinion, right? And then what do we do with opinions? We think of them in logical ways. So logic, there's no room for logic in this environment. This environment is highly random. We have to be open to anything. And that's why I believe in the price action, because price, it incorporates everything, all the known information in the world, it prices it in at the moment. So all the smart money out there, all the funds and all the big players that have access to better information than us, they're going to act on that information. And they're large enough to generally move the market. So if they're doing something and they're leaving footprints, which, you know, I'm looking for certain things, then I'd rather believe that before I believe anything that comes out like on mainstream news, because they knew before it came out on the mainstream news, right? Because they have that kind of pull. We don't. Never rely on any type of mainstream conventional information, some kind of expert telling you stuff, blah, blah, blah. Never rely on that stuff, especially if it's on a public forum like, you know, YouTube. Okay, anyway, so thanks for asking about that. Hey, Sean, DMY, okay, oh, let me see. Is that DMY? Hold on. Is that a stock? What is that? Let me see. Oh, yeah. Oh, are you in that? That's really nice. Obviously, news, that looks like news. Yeah, at this point, well, here's the thing. Definitely have to take something off the table. When it does something like this, and you look at this long tail on the candle, people are taking something off the table there, right? You have to take something off. How far has this thing gone previously? It went all the way to here, right? What is that? About $15. And this thing is right now at $12. So you have some room to run. So here's what I would say about something like this. And look at this nice consolidation for such a long period of time. These breakout things are great when they break out and they actually go, right? We used to see these a lot more not too long ago. Anyway, so the thing is, yeah, if you have some, lock some in and then let some ride. Nothing wrong with trying to let some ride and see if this momentum continues. Just because we have the pin bar, right, and this candle may close like this, doesn't mean it's going to take out the low of the pin bar, right? Doesn't mean that the low is going to get taken out. You may get another inside bar, right, over the next few days, and then the candle after that may do something like this, right? Possible. So you want to give the market a chance to pay you in that situation, as long as you're locking something in and basically your reward risk is, greater. I would imagine on something like this, your reward risk is greater than 2 to 1. So as long as you have a good reward risk and you've locked some in, yeah, let it ride. Let the market pay you for as long as it wants to until it starts to change, right? And then you want to get out of more. But always lock something in. And I know you know that because you've been with us for a while. But a lot of people, what they do is they think, oh, I got a home run here. I'm going to hold it because I know this thing is going to go to 100, right? Because someone in some chat room told me, right, or whatever. And then they give the whole thing back. So obviously, you don't want to, I know you're not going to make that mistake, but people make that mistake. And the way to avoid that is you reduce what you got, take something off the table while people are willing to take it off your hands. Okay. And try to let some run. All right. Hey, Kuala Lumpur. Cool. Hey, can you check pound? All right. I've been looking at the pound recently. All right. Let's take a look at the pound. So the pound has been strange, right? They had their rate announcement on Thursday, I think it was. And you had this nice bounce off of this support level over here on the pound. And then the next day or whatever, it started to give it back. Here's what you have to understand about the pound, right? All fundamental nonsense aside, the pound is generally in a support area, so we can't argue that it's in any kind of trend, right? The bigger picture is still bullish, and it's trying to hold this broad, as you see, very broad, higher low support. I mean, look at this thing. Look at the structure. It goes on for a very long time. What's confusing about it is you can argue that this red candle from the previous, Friday or whatever, is a lower high. And you can argue on your smaller time frame that this is bearish and that this thing should make a lower low. Well, yeah, based on that recent structure, it should, but that recent structure doesn't carry much weight relative to that gigantic structure, the higher low that we just looked at, right? So as far as, based on that, if the pound gives you an inside bar, right, which it's trying to do here, a bullish inside bar, and it takes out the high of this inside bar, that would be a new long signal. And that signal would be coming from, or coming after, this bullish outside bar, which established itself off of a major support area, right? So that's just nothing but long there. I mean, everything is lining up for long, and there's nothing bearish really. The bearish argument is very weak here, okay? So I think that would be a worthwhile long. And your risk could be defined. You can look at two places for that risk. You're looking at the low of the inside bar. That would be tight and possibly, much higher chance of getting stopped out. Or you can give it more room and use the range low or the support low, which is 136.09, that area, 136. So basically, if this is going to hold, it has no business going back to that support area. Okay, it has no business going back here. So that would probably be a wiser place to put the stop, but of course it's going to be more risky, right? You're going to be taking a larger loss if it goes there. If you buy the high of the break of the pin bar, of the inside bar high, which is what right now it's 37.29 is the high, but the candle is still open, so it has to close, and then that becomes your level. All right, so you're looking at like 130 pips of risk on something like that if you use this low, but that's the pound. That's pretty normal for the pound. Typically with the pound, you're looking at least 100 pips of risk for every swing trade. That's like an average. Okay, so thanks for asking about it. I like it generally as a long. Now, keep in mind, the pound's been acting a little strange here. You have to keep an eye on the dollar index, because if the dollar index breaks out, that may put some bearish pressure on the pound. Okay, theoretically it should. So just something to keep in mind. The dollar index has not broken out yet, but it looks like it's going to try. So thanks for asking. Okay, hey Luca, what about long CGC? I used to keep a closer eye on CGC, but I gave up on this one because it's just been such garbage. Look at this thing. So to answer your question about a long, I mean, this is, you can argue that this is a bearish trend. Okay, I mean, I had an old trade from here. Look at that. I mean, that stopped out. I don't even think that one became active. But lower highs and lower lows all over the place. here's the thing, on something like this, I could see why you would consider it a possible long, because you're coming from a support level, right, that dates back to here, right? So you're back at that same level. That's a point of interest, right? And not only that, but you have a higher low that's developed and established between Friday and today, right? A nice outside bar here. So you have that going for you, but this is aggressive because you have not proved, there's nothing that proves that the structure has changed. And you have all these resistance levels. You got this one first, okay? Then you got this one here, right? This area right here. Then you got another one over here, right? And then you got another one over here. So it needs to start taking out some resistances. If you take a long here, it's super aggressive. And these pot stocks have they've been nothing but trouble, right? Nothing ever good comes out of them. So that doesn't mean it won't change. The question is, are you willing to take the risk? You know, if you are, these are obviously good prices and they're out of play because, you know, they're probably not in too many day trader radars right now. This thing is what, up 82 cents today? So, you know, again, you have the beginning of something, but if the broader structure stays intact, I'd be looking for a new low. Okay, so that's where you have to decide if you're willing to take the risk or how nimble you're going to be if the thing turns the wrong way. When it starts taking out resistance levels, that would probably be a better time to get involved. Or what you could do, take your small bite now, and if it starts breaking resistance levels, you can add to it on one of those breakouts if the structure could keep itself going. Because here's another thing you have to keep in mind. Just because, let's say we break this one here. What price is that? Is that 20? Oh, it's 17.70, right? Let's say you break that. And you get a higher low and a higher high. Okay, I think this thing is reversing, right? And then for some reason, it doesn't want to break 20, right? 20 is over here, this area here. And then it just turns the other way again, right? You can't sit there and say, well, you know, I'm just going to give it a chance. I'm going to give it, if it turns the wrong way and starts breaking minor supports, that, you know, that means that leg is probably over and, you know, it's probably on its next leg lower. So just something to keep in mind, all right? So thanks for asking. Hey, David, what is next for ETHEUR? Okay, hey, no problem. ETHEUR. So this is going to be similar, you know, euro is like a stable coin, right? It's like the dollar. And so it's going to be similar to euro, hold on, Ethereum against, yeah, all right, it's the same chart. Okay, so here's the thing. It's following, this is total Bitcoin follower, right? And you have the same situation here. You have a series of lower highs, okay? And you have this bearish pin bar developing today. So if this candle closes like this and you take out the low after it closes, that will be a new sell signal. The question is, does it take out this support? And Bitcoin will have to do the same thing. This is 25.58, right? 23.55 is the low. So you're looking at basically 23.5, right? Will it take that support out? That will coincide with the 40K low on Bitcoin. This is not a good sign if you're long. Like, so for example, if you bought the buy signal, this lousy buy signal, and this is the next candle you get, that's a warning right now, okay? Because this is not what bullish momentum looks like. So either, you know, you wait for the close, wait for the sell signal, make an adjustment or whatever, or if you're not in it, just step aside and see how this thing behaves, that support. Based on this structure right now, the support is likely to get taken out. That doesn't mean it will, because there's also a possibility that this broader move, right, the broader bullish move asserts itself and you get the double bottom, right? So I'm looking for the double bottom. That's what I would like to see, but I'm not going to try to second guess it or jump in front of it or anything. I want to see the right confirmation at the level, and I want to be able to take a risk that makes sense, and I'm watching Bitcoin for that. So I'd be looking for the same type of situation here. If that level breaks, you're looking at the next support, which will probably coincide with Bitcoin at 37K. It's this area right around here. What is that? That's around 2,000 or 2,100 on Ethereum, or an Ethereum against Euro, 2,100. Okay, so thank you for asking about that. Let me see what else we got here. Ludus, hey. Okay, Solana. I talked about it earlier, right? Because everyone likes to get into this hype coin, Solana. All right, so let's talk about this here. Now, Solana has been strong. Clearly, the structure, there's no question, right? Higher lows, higher highs. Recent price action has been corrective. Okay, fine. We talked about the support over here in this area. I've talked about it in previous streams at 124, right? Bounced off of that, and it looks like it bounced off of it again, right, in this area here. Not only that, but it just gave you a buy signal earlier today. The high here is 140.80, and right now this thing's at 143.46. So this is a buy signal, and you do have a higher low. Thing is, it looks kind of like what Bitcoin was trying to do. So you have to be careful. This is aggressive. Yes, everything lines up. If Solana was doing more of its own thing, which I guess it can do, but I don't like this recent structure, right? It's still bearish, and it needs to prove itself by taking out this resistance right here, 151.5. That would make me more comfortable, but of course you're not getting the best price. You'd have to wait for another pullback or something, but at least that's telling me the structure is changing. My question is, if Bitcoin breaks, which it looks like it's setting up to do, what is this thing going to do? Is this thing going to hold nice and just, do its own thing? Or if Bitcoin breaks, is this thing going to go back to its support? So that's a chance that you have to be willing to take. This is a buy signal, and the risk can be defined from this low is probably the better place to put it, 115. So you're looking at 143.5, so 140 to 115, right? That's a good, 25 points or something like that? You're looking at least 25 points of risk, and you're hoping that Bitcoin holds and this thing can continue. If Bitcoin breaks, this thing could be a fake out right here. So that's what you have to be prepared for, and you have to constantly watch this thing. But Bitcoin aside, I like this setup. I mean, you have everything here for a long signal, and the structure agrees. The general structure is bullish, and this thing is a higher low off of this structure may be this bearish structure. Looks like it's about to change. So you do have a lot of things in your favor. It's just, like I said, that Bitcoin situation can stop this party real quick if Bitcoin breaks. All right, so something to keep in mind. If you're willing to take that risk and this thing goes on its own, or Bitcoin holds and starts to push, you may have a nice trade here. All right, so as long as you're keep in mind, people always wonder, where should I get out? Well, if you're risking 25 points or 30 points, your first target should be at least 30 points. All right, 1-to-1 at minimum. And if the market can't do that, or if it looks like a struggle, and that's been our problem with Bitcoin in recent weeks, is it gives buy signals, but the potential is just not worth the risk. So we don't even bother. We could be right, it may go the right way, but there's so much congestion in front of it, there's so much trouble in front of it. It's like, why take that chance that it may get stuck somewhere? So what? I'm going to try to make 1,000 points, but I have to risk 4,000 points? Can't make money like that in the long run. So anyway, that's SOL. Thank you for asking that. I definitely like it. Okay. FIL. So let's talk about this one. This one is not as attractive, right? Now, why? Well, look at the lower highs, right? Lower high, and you broke this supports over here. Again, it's acting relatively weak to Bitcoin. This thing should not be this low probably. You have a bullish candle, right, which is it was almost an inside bar, but it broke above a little higher than that previous candle. But the general structure is too against you here. I wouldn't touch this. I'd leave this one alone. Solana looks a lot better because theoretically this thing should make another lower high, and it should establish that around here somewhere. Okay, based on this previous support, that lower high is likely to develop right in here. So why bother? Why don't you wait until it gives you a better structure? So buying into at these levels this is extremely aggressive, right? Because you're stepping into something that's really showing no sign of changing besides one green candle in the face of a larger bearish structure or recent bearish structure, while Bitcoin is possibly testing its support. If Bitcoin breaks that support, this will probably turn red pretty quick. I mean, based on the look of this structure. Now keep in mind, I'm talking about structure. I'm not talking about the bigger trend. This is the broader trend right here. So that's why I'm not calling this is not bearish. This is just a corrective move. And at some point, that corrective move may change and go back to the broader trend, right? The broader trend will reassert itself. But in these situations, when you have lower highs and the structure is just not favorable, I think it's more effective to wait for something like a double bottom, right? Or higher low to develop at least, rather than taking something as aggressive as this. Does that make sense? So I hope that answers your question. All right, let me see what else I got here. Thanks for asking. Alex, KOTI USD. KOTI USD. Let's take a look. All right. So we have a coin that's on its highs. All right. Now, when you see something like this, again, it's very tempting. Let's look back. Let's see where it is relative to the bigger picture. It broke a pretty important resistance from way back when, right? Looks like all-time highs here. Now, actually, it was higher, what, 2 days ago? It was a little higher. You can see the pin bar here. So I would not touch this at these levels. I mean, you're at pretty risky levels here. It looks good. You can argue that this is a higher low and all this other stuff, and it's going to keep going and blah blah blah. But if you're aggressive and you want to take that chance, because other coins, they've given a similar look. Coins like Solana, where they'll give you a little congestion like this, right? Little congestion, and then they just go nuts after that. If you want to take something like this, right, you wait for this candle to close. The high of the candle would be the buy signal, which is what, 63 cents? And your risk is going to have to be defined by the congestion low. It's not even a range. It's too small to be a range. What is that? 48 cents? So right off the bat, you're looking at 20 cents of risk. If you buy into this thing, let's say that scenario unfolds, right, and you buy it. And you buy it right up here, okay? And the next candle pulls like a Solana move where it just gives you a big red pin bar, like right there. And you're like, oh yeah, it's working. And then it closes red. That's your warning right there, okay? That's really where you should use the break of the low to either get out, take your small profit, because now it's very risky to stay in something like that. Because keep in mind, if this thing is going to play nice and go vertical like it looks like it wants to, then bullish momentum looks vertical, right? It looks like this. You shouldn't see bearish pin bars developing, all right? Especially on the daily time frame, you should not see that. So that's the idea there. Now, again, this is a risky area, and the chances of what I just described, you know, trying to break higher followed by a fake out, that's very likely to happen. So if you don't want to get caught up in that mess, then really the thing to do is to wait for the next support, and that would be here. Here, let me draw a line on there. That would be around here somewhere, and right in the middle of this consolidation, which is around 39, 40 cents. That would be a much more ideal place to be looking, okay? Or maybe this low over here, this range low at 36 cents. Those are your levels on this thing if it wants to test that low. Keep in mind, and I know you know because I talk about this all the time, coins that are doing stuff like this and they're just basically ignoring Bitcoin, often they're just being hyped somewhere. And you don't want to get caught at the top of that hype. All right, so thank you for asking. Hope that helps. Let me see what else we got here. Hey, Winter Fresh. You sound like chewing gum. From Romania. Yes, another Romanian. I'm very famous over there. Okay, so here's a good question about BTC dominance. People ask me about that. There's all these other these other variables of BTC dominance, BTC long short, you know, all these other things. I don't look at those numbers at all. You know, first of all, you have to understand something. All those numbers, if there was any advantage to looking at them, for one, the information most likely would not be available or available for free. So there's really no advantage. I like to keep things simple. All it does is add another layer of complexity. People say, well, you know, maybe you can get a clue here and there. I can get clues from my chart, right? If a bearish pin bar shows up, that's all I need to see. I don't need to see anything else because I know what's likely to come next. And if that fakes out, then I know what's likely to come next after that. I don't have to get wrapped up in BTC dominance. I don't have to get wrapped up in blah, 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 because more is not better in this game. Less is more. So that's why I don't pay any attention to that stuff, okay? You know, you get these fake gurus that come out with these things, and you know what they do? They cherry pick like an example. They say, see, look, over here, it showed this, and then look what happened. Right, thanks for showing me the one example where it worked. So never pay attention to that stuff, or at least I don't, because I know there's no value there. You have to understand something. In this game, there's very little information out there that's available to the public that has any value. There's very little information. All right, and you have to know what information carries any value, and you have to know how to filter it out from everything else, because as a retail trader, we have no inside information, okay? We have no advantage, and markets are highly random. So the only trick that we have, or the only thing that we can have that can go our way really, is trend. That's all we have. So it's our job as a retail trader to find things that are going to tell me about the health of the trend, and I can get that from a chart. But even then, people are focused in on charts, right? Oh, I'm going to get all the information from a chart. But even then, a chart helps us gather clues for reward, risk, and potential. But after everything is said and done, it's all about the risk that you can take. So you could look at all the BTC dominance in the world. It's not going to help you better assess your risk. That's really what it comes to. People that can take more risk will make more money. They will lose, of course, because they're taking more risk, but where there's risk, there's reward. I mean, that's the way it is. People that don't want to take risk, well, you know, you're not taking risk, you can't really get anywhere. The thing is, when you win, you have to win more than you lose. That's it. People want to, what's the secret to making money? I just gave you the secret. You have to win more, not win rate. You have to make more money than when you lose. So if your average loss is, you know, $100, your average win needs to be more than $100. Otherwise, you can't win, especially because this game incurs costs. Okay, so thanks for asking. I'll start. Don't start me on one of those rants. I'll talk about that forever. All right, let me see what we got here. So Schwartz from Sweden. Look at this guy. Schwartz Bond. One day he's in Monaco, then he's in Turkey, then he's back in Romania. Now he's from Sweden. Unbelievable. This guy's everywhere. Next he's going to be like somewhere exotic like Macau or maybe you know, the British Virgin Islands or something. I don't know. This guy Schwartz Bond. International man of mystery over here. Wow, very nice, Schwartz. Well, thanks for joining us from Sweden. Okay. Greetings from Berlin. Okay, Berlin, welcome. Okay, Germany. Oh, another German. Okay, cool. And getting popular in Germany. Can you check silver? Okay, Peter, let's take a look at silver. XAGUSD. I'm sorry, I put the wrong symbol in there. I said silver and I put in gold. All right, XAG. So now, here's the thing with silver. Silver it's just going to follow gold, right? So the silver CFD, for one, it's a larger contract, so it's kind of a pain if you have a smaller account to deal with. You're better off dealing with gold. But let's take a look at the chart anyway. Silver has been showing these lower highs and lower lows. Silver is not in a trend on the more recent time frame. Just going back, look at this, right? People argue, oh, it's bearish. Silver's bearish. Silver's not bearish. Silver is range bound, right? So you have the low part of the range, you have the high part of the range. That's silver. Okay, and gold is in a similar situation. Gold has been basically in a broad consolidation, right? The wave 4 consolidation that I also believe Bitcoin is in a similar situation. So what do you do with this? Well, you're near a range low, which is attractive, right? When you're in a range-bound market, you want to be interested near the lows, you know, buying near the lows and selling near the highs. The area you want to avoid putting on any new positions would be the middle, which would be this area right here. So you are in an area of interest, and same with gold. Okay, like I was saying earlier, I like that gold situation. I like the location generally. It's just what I don't like is the dollar. So if you want to take the risk on silver, you're at the right location for taking the risk. Low here is 22.40. So you need to give that thing some room, perhaps around 22 even. You have the bullish pin bar. Okay, it took out the high of that pin bar. Yeah, it took out the high. That's actually a doji. And you do have the buy signal in place on silver, similar to gold. But like I said, you know, silver doesn't really trade on its own. So you have all that bearish structure that you're competing with. But the point is, if you're going to take a chance with this thing, an aggressive trade, this is probably the best location to do it. Okay, this area here, because you're at the range low. Now, if the dollar breaks out, which it's trying to do, don't be surprised if silver takes out 22. All right, so just something to keep in mind. Now, what you may get here is also a failed low situation where silver breaks the 22, right? Gets everyone all scared out, short, and all the shorts pile in, thinking, okay, silver's going to zero, and then it reverses like right here, right at the $20 area or low 20s, and then watch, you watch basically the dollar make a failed high in that scenario, right? That would be a long signal on something like silver. Again, it's aggressive because the structure is not in your favor. But like I said, if you're willing to take the risk, those would be better places to do it rather than trying to buy these resistances in something that keeps showing respect for the resistances. All right. So I hope that makes sense. But I definitely like the idea generally as a long. Just keep a close eye on that dollar. If the dollar gets decisive over the next few weeks, I would stand aside on these things, okay, and wait until the dollar, wait until the dollar cools off. All right, so thanks for asking about silver. What do you make of Mover, M-O-V-R? It's a stock. Okay, Will, let's take a look. Mover, M-O-V-R. Is that right? M-O-V-R. Oh, no, it's not. It's a coin, it looks like. Okay. So what do I make of Mover? Moon River. Oh, someone had asked about this before, I think in a previous stream. So look, that structure, clearly bullish, right? Nothing bearish about this generally. You have this retracement, okay, this bearish retracement. You have a double bottom that's completed, it's established. This looks just like Solana. Looks very similar to that Solana situation, okay, or that coin that we just looked at. Was it Solana? Or yeah, I think it was Solana. And you have the buy signal off the pin bar here. There's a buy signal here at 324 is the high, and this thing right now is at 347. So there's a buy signal in play. The risk that you face, again, would be the pin bar low, which is 258. I mean, that's quite a sizable candle right there. If Bitcoin fails, right, which it looks like it's trying to do, the question is, will this buy signal just go away? It's possible. Right? That's what you have to be careful of. So it looks good at the moment, but if it turns the wrong way, you have to be quick to adjust. Like if you get a bearish pin bar over here or some kind of bearish inside bar and Bitcoin breaks 40K, then I would get away from these things. But until Bitcoin does that, you're willing to take the long risk on this. I mean, everything is there for a long. Okay, now the question is, can you justify your risk? This thing will probably have to go, let's see. This thing is at 348, and your low is at 2, so it's 90 points basically. So you need to make 100 points to justify that, and that's assuming that you're buying it. Hold on, 348. Yeah, that's assuming you're buying it now, right? 90 points. Can this thing run 90 points? Let's see. What's this resistance? 471. Just about. You're looking at just over 100 points if it runs there. It needs to go up there to justify your risk, right? That's 1-to-1 right there. So again, this thing may have a lot of potential congestion in this area because other people will be getting out early, right? You have to be careful of that as well. Meaning if you buy it and it starts to work its way up and then gives you something bearish in this area, and you haven't justified your risk, you're going to have to make a choice there. Do you take your small profit, which was not worth your reward risk? Do you give it more of a chance? Do you raise your stop? You have to make that decision. Okay, swing trades they don't require as much decision making as a day trade, but they still require a lot of decision making. That's why a lot of people, they don't realize that, right? They just get in and hope for the best. They don't want to make any more decisions because decisions are hard to make because you could second guess very easily and it's hard emotionally. All right, anyway, so I hope that answers your question. Let me see what else we got here. So that's Moon River. Okay, Schwartz. Everywhere I go, I never... Oh, that's right. Schwartz could be like in Antarctica and he'll still watch my stream. Now, I appreciate that, Schwartz. Even if they have like lousy internet, he still watches it. Thank you. I appreciate that. Thela, greetings from Pakistan. Welcome, Thela. Okay, cool. All right, so let me see how I'm doing here. Where's my timer? Okay, so all right, I'm pretty much on time. I'll give it a few more minutes. Any other questions? I got everyone's questions here. Let me see if there are any other questions, and let me leave you with a message here. Let's go back to Bitcoin. Okay, so again, we just looked at a bunch of charts, right? Like Solana, and we looked at this Moon River and stuff like that, and they're good-looking charts, and those coins have a tendency to do their own thing. Okay, those are good things. Bitcoin is not cooperating right now. Right? That's not a cooperative candle. And if it closes like that, like I said, it can generate a new sell signal. Just because we get a sell signal doesn't mean it will follow through. So it's very possible that we fool around the support again and we reverse again. It's possible. So you have to watch that, right? So my point is this. In this game, we're using charts for guidance. We're using charts to evaluate risk, and we're using charts to get a sense of what's within reason in the near future, right? So you can gauge potential. But like I said before, this is a game of risk. So you have to be willing to, once you have the risk properly defined, like we're doing on the chart, then only you can answer that question. Is this a risk I'm willing to take? Okay, or how much is this going to cost if I'm wrong? Forget about what is right. Okay, like forget about how much money you're going to make. That's what everyone focuses on. That's the conventional thing to do. Oh, look, I can make 200 points. That'll be $1,000, and my account will be up double. Blah blah blah. Right? That's what everyone thinks. But that's the wrong way to think. You have to assume that most likely you will be wrong. You have to assume that your chances of being right are maybe 50%, maybe slightly more, maybe, right? If things have lined up a certain way. That's our goal as a market timer, is try to get better than 50%. Win rate. Everyone's focused on that. Wow, win rate. I need 80%. Right. That's very unlikely. And if there's anything that is 80% or 90%, they're not going to sell it to you. So they're not going to sell you some robot that has a 90% win rate. They would never sell you something like that for a couple $100. They would just use it for themselves and make all kinds of money, right? Why would they sell it to you? So keep that in mind. This is about risk. So another thing I need to mention, because people have a lot of preconceived notions or misconceived notions, I should say, when it comes to account size, right? So people come into this game, especially with the coins and stuff like that and Bitcoin, they come into this game with like a couple of $1,000s or something like that, and they think that in a couple of months they're going to go from a couple of thousand to like 10,000 or something like that. While it is possible, because anything is possible, the chances of you turning $1,000 into something like $10,000 are extremely low. It's basically like playing the lottery, because the risk that you have to take is so high to get that type of return that chances are you will wipe out your account, right? That is not how people make money. That's not how, if you want to make like enough money to pay your bills and basically quit your job and that kind of thing, day trading these things or whatever, you can't do that with $1,000 or $5,000. You need like $20,000, $30,000, $50,000, something like that, because your goal should be maybe 1 or 2% per day, or in a trade, which could be a few days. That's what you're looking at. 1 or 2%, maybe 3%. That's good if you can do that consistently. And people, when I tell people that, they're like, that sucks. I want 30%. Right, but you can't make you're not going to make money going for those big home runs with the amount of risk that you have to take. It's all about the risk. That's why I mentioned it. So I just wanted to give you that talk about being realistic. If you have small money, then expect small money, right? If you have larger money, then you can expect larger money, because you're keeping your risk at a certain percentage and your reward should just be slightly greater than that risk percentage. That's why, for example, when we send out swing trades, we're looking at 1% risk usually, right? Maybe on occasion, 2% risk. That's 2% of the available capital. So if you have, $10,000, right, that's 2% of your $10,000. What is that, $200 or whatever? So you could be wrong 5 times and you're not wiping out your account. You'll be maybe minus what, 5%, 10%, whatever. You're not going to be minus 50%. But when you have a large account and you take a big position, and you don't realize what your risk percent is, you wipe out 50% of your account and you cannot make that back, because now you have to make 100% back just to get back to even, right? So don't get stuck in that game. Just wanted to mention that, right? Because I get questions about that and people just don't understand. This is a game about risk. All right. Also, I asked you some questions. Okay, ADA and DOT. All right, I'll take a look. One other thing I want to mention too, real quick, because I get this question a lot, and people need to understand what you're up against. And when it comes to like fake gurus and all the stuff that they push, the gimmicks that they push, understand this. If you look at a real professional algo trader that works for a real proprietary market making firm, not a fake retail one, a real one, right? A real one that actually, is moving millions of dollars and this and that and whatever, making a market. First of all, they hire top engineers from like top engineering schools like MIT. They pay these people $350,000 a year or whatever, something like that. Now, don't you think for a moment, if you graduated from a top engineering school and now you have this knowledge, right? You can program stuff, you can write programs, automated programs, and you have this financial engineering knowledge. Why would you go work for a market making firm when you can probably raise a couple of $1,000s from your friends and family, right? Write your robot and just have that thing make money for you while you sleep, and you don't have to work for anyone. Why would these engineers do that and have to be stressed out? And yeah, sure, they make big money, but there's a lot of responsibility put on them and blah, 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 right? This and that. It's because they can't make any money on their own. They need company resources, right? So when you're a prop trader at a real prop firm, you have millions of dollars behind you, right? And basically they're playing an engineering game. So my point is this: if they can't go on their own and just write a robot and that they're not going to sell to anyone because it's theirs and they're going to make their money with it, right? Why would they sell it to you? If they can't beat the market on a consistent basis and they have to go work at a firm for $350,000 a year, what makes you think that you're going to do it, using retail tools like moving averages? These guys aren't using moving averages and oscillators and all other nonsense. Those are all gimmicks for the retail trader. Okay, so I just wanted to mention that because everywhere I look on YouTube and on TradingView, it's always about this oscillator, that moving average, which moving average should I put, what about the 200, what about this crossover, what about, these are all gimmicks, okay? And there's no advantage to using any of them. It's just 50-50. Now, I put together, like I mentioned my ebook, I put together a collection of techniques that help you develop a context, right? So yeah, we're using conventional techniques because that's all we have access to, right? But we're doing it in such a way that it gives us a sense of context. And what the analysis that you're seeing me do here is based on that. So we're looking at levels, we're looking at structure, we're looking at support and resistance, we're looking at candlesticks and those kind of things. And when the market confirms, then hopefully we can isolate a potential opportunity based on incomplete information, right? And as a retail trader, that's the best we can do. All right, anyway, enough of that rant. Let me go over these charts real quick and then I'm going to stop talking because I talk too much. Schwartz, you got to stop me. I talk too much. Okay, let me see what we got here. So we have ADA. All right, so let's take a look. Usually people ask me about Cardano. So Cardano is typically a follower, right? Typically. A lot of hype on this coin. That's why I really don't like the coin at all. Too much hype. There's too much expectation and promise on this thing. People are way too optimistic. And I'm not saying it's bad to be optimistic, but when the whole world is, that's a problem, okay? You have to think opposite. So all I see here, I see the bearish corrective move, right? The corrective structure, lower highs and lower lows, like Bitcoin. So on something like Cardano, and I think Elizabeth took a swing trade, not a swing trade, a position trade she had mentioned the other day off of this low here, which was nice. But now look what it's doing, right? It's pulling back a little bit. Okay, no problem. In this situation, if you're not in it, okay, for a swing trade, it could be setting up if you get the double bottom, or perhaps the higher low in the current area where it is now, which is around, what, $2.15, that area. There's no buy signal here at the moment, because again, it's following Bitcoin. So if Bitcoin reverses and gives you a buy signal, you're likely to see the buy signal in here. If you get the buy signal here, you're getting a higher low or potential double bottom. That would be an attractive place for a swing trade long on Cardano, if it can produce that. If Bitcoin breaks 40K, this $2 area is likely to break also, okay? And then you're looking at, what, 150 or something? Whatever coincides with 37K on Bitcoin. So that's what you're looking at there. So, I mean, generally speaking, this is not a bearish chart. It just needs to give you a better buy signal, okay? This corrective move is likely to establish a higher low somewhere along the way if Bitcoin can do it first. All right, so thanks for asking about Cardano. And DOT, okay, let's take a look at DOT. What's going on here with DOT? So similar situation. DOT's also a follower. Look where you are. Look where you are, right? So you're going back into this support here. You have this bearish pin bar similar to Bitcoin. The location here, you have this, the recent structure is a head and shoulders, but I wouldn't put a lot of weight into that because, again, if Bitcoin gives you a bullish reversal, no one's going to care about this head and shoulders. All right, it's going to just reverse in everyone's face. So don't let that distract you. You're at a level where this could be a higher low, all right, a broader higher low relative to the bigger structure. This is the bigger structure over here, right, that whole thing. So you're at an attractive level. What you need is a buy signal. All right, if you get a buy signal, again, similar to Cardano, you get a double bottom at, what is this price here? 25.50 area, or you get a higher low somewhere around here where it is now, maybe 27.50, maybe 26.50, right? That could come in the form of a bullish pin bar, right? Bullish pin bar, or maybe an inside bar. That would be a long signal as well. You could measure your risk from, I mean, the better place to do it would be this low over here, the 25, what is it, 25.91? So 25.50, you should round it. Okay, that would be the place to measure your risk. Now, as far as reward goes, it's going to have to take out these highs, okay, for you to justify anything there. But if you're willing to take that risk, right, you should at least be looking to at least for 1-to-1 to start taking some money off the table. I mean, what price would that be? If this thing gave you a long signal at around, let's just use this candle, 30.26. What is this over here? 33. And the low here is 25. So you're looking at least 5 points. What is the high over here? 38. So most likely you'd have to be buying this, you'd have to be start selling around 35. If you're long somewhere below 30 to start taking some money off while your risk is justified. Okay, so I hope you found that helpful. Again, Bitcoin is your guide. So if Bitcoin breaks, I wouldn't expect much from these things. I would just step aside and let Bitcoin stabilize, right? Let Bitcoin and Ethereum stabilize, and then you'll probably get your buy signals in these things again. Now, keep something in mind, and then I'm going to wrap this up. If Bitcoin breaks hard, and it breaks 40K, that's going to confirm that this bearish structure is still in play, and a lot of these altcoins are going to break those double bottom supports and establish a potential bearish structure. In those situations, it's going to take longer for those things to recover, right? Because they're going to have to take some time to change their structure. Keep that in mind. So why I'm saying that is don't rush in, or I don't think it's a good idea to rush in on the first bullish candle that you see after such a pullback, because everyone's going to see the pullback and then a bullish candle develops. Should I buy it? Should I buy it? Should I buy it? Not the first candle, okay? If they break lower, not the first candle, because they're in a bearish structure, and that first candle can easily fake out, right? One candle is not enough to provide evidence in that situation. Okay, so thanks for asking. I'm going to wrap this up. Always a good rant and a good package of useful knowledge. Okay, David, cool. I'm glad you found it helpful. Thela, if time permits, please shed some light on BTC from an Elliott Wave perspective. Okay, so I can answer that real quick. And how do we know if Wave 5 is about to start? Okay, so as far as the Elliott Wave goes, I consider this a broad Wave 4, okay? Now, Wave 4 began up here at once 64K got stuck and broke lower, and it gave us the lower high. I was talking about this at that time because I was able to count the 5 waves in the broader wave 3. So this entire structure, okay, all of this is actually wave 4. Okay, even though we have a higher high in there, that's actually sometimes wave 4 can do something like that. So we're in a wave 4, and in order for us to prove that we're broken out of the wave 4, the market needs to take out this high of 64K, which is, you know, a little bit of away from here. So I wouldn't sit there. The most likely, if the market's going to do something like that, the structure will change way before then. We'll have a bullish structure, and, you know, we'll be on our way to breaking out, improving wave 5. Keep in mind, inside of a wave 4, wave 5 can begin. This may be the beginning of wave 5. This could be the leg 1 of it, possibly, and we may be in the leg 2. But there's no way to know until the top of wave 3 is cleared, right? So that's why it's not a good idea to assume that, oh yeah, we're in wave 2 of 5. This thing's going to go to 100K from here because wave 5 should make a higher high, right? So that's why, you know, I'll consider this a wave 4. I'm not going to call this price action 1 and 2 of a 5. Of a broader 5. I'm just going to say it's a wave 4 until it proves otherwise, and we need to break the wave 3 high. I try to keep Elliott Wave very simple. All right. We may get subwaves, like impulse structures inside of subwaves that you can work with, but I don't let it confuse me. All right. When this structure changes and we have another leg higher, hey, that's all I need to know. We have a leg higher, and I can start working with that. Until that, I'm very cautious because that means the bearish structure is still in play, and I respect it until the market tells me that it's no longer in play. All right, so that's pretty much how I don't get distracted by the wave counts, because they can also, since they're very subjective, they can also lead to an opinion, and you don't want to get stuck in that. All right, so anyway, I hope that answers your question about the Elliott Wave count. Again, I keep it very, very simple. All right, so I'm going to wrap this up now, everyone. Thank you so much for listening. I got most people still here. Okay, cool. Thank you all for taking the time to ask questions. I hope you learned something here. If you can, please press the like button. I think that helps with my video a little bit. That's pretty much it. So again, I will stream again on Thursday. And, you know, I'm still working on that TradingView thing. Hopefully I can get that fixed and all that other stuff. All right, so with that being said, thank you all for watching wherever you are in the world, and, you know, I'll see you on the next stream. Thanks so much for watching.